screen. We don't have time to waste. Other than 5 people. Alright. Fair enough. We're just doing some brief stuff on entries right now. I will be some of you came to my DM, you were asking, can we use the entry where price takes out a point of interest? Can we use it for externals? And my reply was yes, of course. Okay, it can work both internal, which is inducement, disruption, and even external. For example, this particular trade I am on currently, like right now, I'm in over an $8,000 profit right now. This is an external. I already checked the trend. You can try to confirm it yourself. Just throw out all the externals to the most recent external. This is the last most recent external that we have here. Okay, and as you know the due, price took out little or no reaction. It just whether you this one is even better for people that might be busy and you miss a trade. You just when you miss you price takes out the point of interest and you miss it. It's just very easy. Okay. This is this is an example of maybe almost a pullback candle, maybe. But not really, because it did not close above this. But let's just assume. Okay. So but this is a demand zone. Though this demand has been mitigated by this candle. So we will track it down to get something unmitigated. Let's go. So this guy has been mitigated, which means that the power has been transferred from this guy to this guy here. Okay, so uh we can take this guy mitigated. Let's go to 30 minutes to check if we have something better. But it doesn't invalidate this entry. Now, remember what I was talking about? I don't know. Is it in the video I dropped or I actually told you guys? I said that if you are entering directly from here, price can give you a snub entry. So entry directly from the demand zone that got swept out to, fair enough. That's where the whole stacking stuff will come in. There's what we call stacking at specific points. Okay. Sharing your entries into different POIs just inside your point of interest. You're sharing your entries inside your point of interest. Okay, so this guy has been mitigated, so we can take something from here, or we just take him wherever. The whole thing is from this point where this demand zone is down to this leg is our POI. You know the meaning of POI, point of interest, the place we are looking out for. So until this guy is taken out, anywhere you take your entry around here is fair enough. Okay, you can see that price little or no reaction to the point of interest came back to it, and I'm calling on this trade since morning. It wasn't my student that brought it to my attention. My student. Okay, so this ongoing. Okay, it's over 1 to 3 already. So I'm going to pull out soon. I won't stay too long on it. But this place is currently buying from is an external. Okay, look out an internal. The sweet part of this you don't doesn't fit your car. Now, what are the qualities you will see that might convince you to enter a trade without for um point of interest to be taken out. Between the inducement and will tell you if you should directly from the disruption. That's number one. The number you have no business with entering directly from the inducement except it's being swept away. Directly meaning cause this fair enough, it came here, it tapped and went up a bit and it later came out to take it out. But this is just pure luck. Okay. Now the good part about this is that if it's not this taking out a point of interest and then returning back, it's called a reclaim block. Okay. Now the good thing is that if it's not a reclaim block, it's not a reclaim block. For example, this point of interest was taken out with no reaction, but price did not come above it. It needs to come. The whole um logic is go down and come above it and come back and buy. So if it doesn't come back, now this whole thing will not work if your structure is wrong. So focus more on the structure video. Even in the Agro class you're going to attend, focus deeply on market structure because your entry model will fail if you are trading against the trend. Okay, so this is an avoidable loss. This one here is very, very much avoidable. That's number one. Now, number two, we have the disruption, which is this low, also an avoidable loss. Let's check. Would we have taken this trade directly from the point of interest or not? Let's find out. So first of all, let's assume yeah it has the sweep of liquidity, good and fine over here. So the distance between this guy and this inducement is really far. Now, when the inducement is not within the 50% of the disruption, it disqualifies that point of interest to enter directly. It makes it very risky to enter directly. Okay, this inducement is far above the discount level. Okay, it is far above the discount level. And if there would have been a reclaim block entry, this thing would have tapped on this demand that it tapped on, which it did. It actually tapped on this demand. Obviously, the last bearish candle before this series of bullish candle is this, which it tapped on. Now, if you were entering directly from this demand zone, you would have taken a loss. But once it taps on it and then it failed to go above the point of interest because they don't have that buy power and that loss can be avoided. Now, once that happens, it means that what we are heading, this is disruption of the order flow. We are now heading to where the external. Okay, we had another, you know what made this place a valid external is because it had three internals, so it's three or more internals. We had another internal here which gave it the qualification of an an external. This guy is here, so we have one, two, and three break of structure. One, two, three, and then this guy becomes an external. Now it came to the external, and that is why where it is buying from the external. This is over a 1 to 3 weeks reward is a fair profit target for even a gambler. Whatever they tell you to do, and they'll give you 3 times your profit, your capital. They have really, really tried for you. There are some people that pull out from 1 to 1, some 1 to 2. Then I heard that the most profitable person takes out his profit at 1 to 1 is to reward. But to me, that is gambling. There's no difference between you and those playing bet Naija, Sporty Bet, and the rest. Because 1 to 1 is like 50-50. If it happens, it happens. If it doesn't, it doesn't. But this person actually put, I think on Twitter, he pulled out, I think, an 18K or 20K profit from Profem. And they asked him, what's the secret behind your, I think the guy is not even from Nigeria. He said he takes out his profits at 1 to 1 week to reward. So I want to think they have really, really tried for you. Anything aside that is your greed level versus you, which is this trade. So why should we not enter this particular trade directly from here? Why do I think we were not supposed to enter directly from here? Number one reason, the sweep, good and fine. We have a sweep here. But then, is there any engineered liquidity at that point of interest? What do I call engineered liquidity? A closed liquidity that looks like, not even that looks like, an inducement like an internal that is close to the point. I'm not talking about social liquidity. I'm talking about an internal that should have been something like this within the 50% as well. Would have been something like this, 50% of this to this, without mitigating this point of interest that it did before going up. So then we would have taken a risk from here. But it did not happen. So when a point of interest does not fit your criteria, it means that that point of interest maybe should not be overlooked, but it should be a trade where price should clear out people before you enter. Okay. Now, about the confirmation entry, or the confirmation entry and the stacking and the entries you already know that I have explained, if it doesn't align with market structure, that trade will not hold. Now let us check if we had a confirmation for stacking at this point of interest. Now you get a confirmation for stacking at 5 minute time frame. At 5 minute time frame. So we go to 5 minutes to look for the confirmation candle. Now, if this trade is a good trade, then once that confirmation shows up, price is not supposed to retrace below that confirmation if the analysis is correct. Now, what is a confirmation candle? It's called a pullback candle. Let me write it. Sorry, I said pullback candle. Single candle order block. This is a confirmation. It's called scope. Pardon me, I went to go and say pullback candle. Pullback candle is different. It's called scope. What is scope? Single candle order block. What is a single candle order block? This confirmation should be found inside your point of interest or just at your point of interest. Either it is found here or it should be found inside your SL. If you get a confirmation inside your SL, that's very good because it has saved you the stress of stacking from entry or stacking. I'll teach you two methods to stack. The first one is stacking with confirmation candle, and the second one is stacking at specific points of interest. I'm explaining the single candle order block confirmation candle first before the second one. Now, what is even this stacking? Stacking, when you are stacking, you should put it in your mind that you are ready to risk the particular money that you are trading with. Okay, conservative trading and stacking is different. If you want to stack, you have zeroed your mind that you are ready to take the risk. So if it's your school fees money or you're having double thought, just trade normal and take profits when you have to. Do not stack. But if you're comfortable to risk that amount of money, then you have the mind. Some people have strategy, but they don't have the confidence. But yes, a good strategy builds confidence. But some people just have this fearful mind. But a fearful money makes no money. Back to single candle order block. Now this is very very simple. It's like the pullback candle, but a bit different from it. How does it look like? It's just one candle should close below another candle, and another candle should close above that candle. This candle that closed below this candle is called a single candle order block. You have to close below this candle. Oh, people are hearing me. Let me check. I'll just be talking to myself. Okay. Yeah. Okay, fine. This candle should close below another candle, and once this candle close below another candle, no candle has to close. If this candle should be a single candle order block, no candle has to close below it again, because the moment another candle close below it, they were looking out for this candle as a single candle order block once another candle close above it. So if a candle should be a single candle order block, once it closes below another candle, no other candle should go below it. It's invalid. That's why I told you that if your single candle order block is correct, it's not supposed to go below that point again. This candle closes below the last candle, and even if that there was one candle here before, and then this one here, and this one comes, the candle becomes single candle. Any candle that closes below another candle closes above it. That particular candle is called a single candle order block. Now, how do you enter the single candle order block? Do you enter immediately, or do you set limits? That's the question most of you might be asking. Now, if you want to set limits, is your own business. If you want to enter just immediately, it's still your own business. But the way I trade it, the moment this candle closes above, I enter immediately. Okay. And if I sometimes just maybe want to just wait, this candle becomes my limit entry. I set limit here. Okay. And then you put your SL, the normal SL. But if we're following the normal single candle order block rule, if your trade is correct, your SL is supposed to be below the single candle order block, because we know that it's not supposed to come down. Let's check if this trade I was on have a confirmation. Though I did not start sharp, I opened only one position, one lot size. Let's check. Oh, okay, good and fine. We had a confirmation for a single candle order block. Now, this would have been a single candle order block if this candle had closed above it with the body. It has to be the body of the candle. So it invalidated these two things. Now we had the next guy, okay, that closed below this one. It closed this single candle order block. It can close below it body or weak, anyone. This one closed with body. This one closed with weak, but this one failed to close above it with body. The closure above has to be with body. Now this one closed with body, and the next one closed above it, making this place a single candle order block. So if you were stacking, you can stack right here. If you're setting limits, you would have set limits here. But if you observe something after this thing here, price did not come back to this point again. That was how it moved to the place it is now. That is for single candle order block confirmation for stacking. Now, if these are the happen inside your SL, you have advantage to enter positions inside here. All right. Now, what if it happened here and you wanted to like open more positions inside your SL? That's where the stacking at specific point comes in. Now, how do you stack at specific points? Let's go to 30 minutes and let me show you guys something. All right. Now we have different point of interest. I told you guys that from the demand zone to where it was swept and to this point is your this was the protected low is your point of interest. From the demand zone that failed down to the protected low. This guy, this one is called a point of interest. Now, how do you stack at specific points? You know that before somebody's entry is at this level, this specific point requires calculation. You need to be smart. Okay. Now you know that this point was somebody's entry. This point here, somebody's entry that failed. You take note of that point. That's your entry number one to stack. Now, if you want to risk, like, let's say you have $100 portfolio and you want to risk, no, sorry, you have $200 portfolio and you want to risk like $150 for that trade, okay? Or you want to risk even the $100, the $200. I want to open 4 positions with stacking. You do it because you see people open too many positions doesn't mean they are not calculating what they are doing. It's your own ignorance that make you get bumped. Listen attentively. Now, this first point of interest that is somebody's point of interest is your first position calculating to stack. Now you have your first limit set here. Just as price returned, it has gotten like I said you want to reach $200 on the trade. Now $200 you have reached. This is your first position. Now you're using one lot size, for example. That one lot size now is taking $100 risk, and you are left with what? $100. One lot size has taken $100 risk, and you're left with, which means that if this trade gets to this point to hit SL, you're losing that $100. Now, how do you enter the rest position? Now, entry number 2 is this point of interest here. This is the second place you will open positions, calculating. If one lot size from here is risking $100 to give you like $200, okay, it means that one lot size from here should be no 0.5 lot size from here should be giving you equivalent profits as this place, which means that this risk from here that use one lot size, the person that entered here with 0.5 lot size is making the same profit with you, and that person is not risking the same thing with you. How do I mean? Now you entered with one lot size here, and then you are risking $100, and price retraced and go to this point. Now you have already calculated that even if you just use your MT5 and you put the buy limit here, and you put your SL below this point, you're using the same SL for all the positions. You will see what one lot size you should give you from here, profit and risk. But if you use one lot size from here, you should be risking like $50 profit, and the same place for TP will be giving you, like, if from here she will give you like 100, 200, 300, 1 to 3 reward. From here 50 should be giving you almost the same thing of $300. But what, you are risking $50 and you open that same one position. Why did the risk reduce? Because what, you are opening at DCA, which means that what, you are opening at specific points. You are not those other POIs that you might think that are not useful. That is where they come in. Now one has gone here, second one has gone here. We still have the last one here. I told you guys that sometimes price buys from the protected low. Now you have another position there. People that open too many positions already calculated it. If their one lot size here, they cannot decide to open 0.1, 0.1, 0.1 to 10 positions to get to 1. That's why I see that it is plenty. It's not like they cannot just open one here. They are trying to try their luck if it's still going to retrace a bit, but they are doing it fast before it like moves. Okay. Now the last one. Now you have what? You have taken $100 here and $50 here. That's 150. And then how much you have left? Don't forget your initial position has been secured. There is a particular position that you open 50%, which is the first position, your main entry. Why are you entering like that? Is because if it did like this trade now, you will not be on the losing side. Maybe you would have used the single candle order block to stack from here. But if you did not stack, you are not losing. You are still on the winning side. Price has gone. This entry abandoned. This entry abandoned. But the same thing here again. This place, you will not even open one lot size. You can open like 1.5 or 2 because the distance between here and this first entry is big. Now, you are now risking $50, but you are opening like 2 lot size that overshadows these two. You can see open 0.1, 0.1, 0.1, and you are maintaining that same SL. You're still going to open 0.1 till reach like that, maybe, or then you just open the position at once. Okay. Now you are still maintaining that normal $200 risk. And once if price catches 3, that's your lucky day. You have a lot of profit. There are some trades that peaks from this point and move. Some we just stop here and move. Some from here and move. Simple and short. Okay, it is nothing complicated. This whole stacking stuff is nothing complicated. So you need to take note of this specific point. If you analyze, you have your eyes, you will see the points where possible price will retrace from that can hold price for buying. Just like this trade now, if I wanted to stack at single candle order block, the confirmation already happened. If I don't want to stack with it, I just put a specific point. Now I can still stack with single candle order block and still use this specific point. All I have to do is minimize the positions I open here and then divide this one lesser again. The other positions that I'll be opening at a specific point, I'll reduce it again because I have gone in with some from here. It's as simple as that. Stacking is not hard. It's just if you don't understand it. That's why. And then you see people opening multiple position. It is the same thing. It's the same thing. They only have few advantage when they are opening. The other ones are showing where the other ones and then before it retraces and then it moves. Just simple as that. The same candle, other block candle closes below and the next one closes above. Whether the next one does not close above this one or anything doesn't concern us. We are just after this one. I think that is all on that. Then what do we need to do again? The top down analysis, which is majorly just putting together everything we have done. It's not hard. If you're giving it an top down analysis, just making it sound like it's a difficult something. Okay, it's not hard. The major things that you are doing is just get your range. I'll write this thing down and I'll send it to you guys. The steps you take to analyze every new pair. Okay, you can choose 3 or 4 pairs to just focus on, so you don't have to be getting range every time, every time, every time. Okay, you get your range low or range high. If as the wife does now, it doesn't give you so much opportunity to go backwards. So what you just do is, if you see 3 external break of structure in a particular trend, it means that that particular trend is bearish or bullish. In that, if it's moving up, I have seen 3 external break of structure, then that is a bullish external order flow. All you have to do is to check the last external that was created. Then you draw your internals, and when you draw your internals, you get the 2 last internals. Check the qualities of those internals. Are they worth entering immediately or not? If they are not, you know what to do. Okay. For a point of entry, that's why some people say that this what's the name entry, strip of liquidity, retracement, break of structure, that the one that looks like this. That's why they say that it actually fails a lot. Let me show you what I'm talking about. That's why they say that this thing fails a lot, because they just enter anywhere they see it. You need to understand if it is worth entering. Okay. You can't just see any sweep and then you enter. No. You have to know if it is worth entering. I had a markup for 75. I just mixed it up with this week 25 and it's gone. That's one thing about the life. If you don't save a particular layout, you can't see it again. It's different from trading view. This one you have to save it before you leave there. If you want to add a new layout, you have to completely exit and then re-enter, then save it new again. Then you can load the layout to see all of them. Just give them the name. So I'm still going to write down the top down analysis method. Not really like top down analysis. Maybe like I'll name it approach. Okay. That's approach to trade. So that will be all. And I hope to see results. You can get my WhatsApp number from my Twitter bio, Sabiigal. If you have any results or few questions, don't bug me with too much questions. Just few, especially on what I explained throughout the class. And also focus on the algo class as well. It's going to give you more insight to help you. And this strategy is not just for synthetic, okay? It works everywhere. It works everywhere. It's also for currency pair. You can see yesterday on gold. Thank God all of you saw it with your eyes. Was it yesterday or day before yesterday? Should be yesterday. Oh, we saw it with your eyes. It doesn't just work. And this is where the whole buy now have started from. Okay. This one is really another one again. This is not even the one I'm even talking about. Okay, this one's not even the one I'm talking about. Okay, this would have been an entry, but the qualification of this did not go. Instead, it's like forming something like this now. Than this, all of these guys were structural liquidity. Assuming that this thing swept one of this and then created structural liquidity, this would have been an entry. It did not. That's not what I'm talking about anyway. Let me check for it. I think the gold entry was um maybe it's that trick. Good on the library. You looking very different. So remember what I said. Okay, this is it. The buy of gold just started. Like we should see buys. Like they took out what would have been their range high. It just got taken out. Assuming that it created three external, because it took out an external low. It just had to create three more external for this place to be even high. So for this low to take out this high, this low is a strong low. That's number one. And then the buy had just begun. Okay, the buy had just begun. So the whole thing of buys movement and all just started. We should be seeing good buys on this good. Don't be limited to because they say this class is synthetic does not mean you should sleep here. And check other things as well. Other markets, crypto, let's see. So and that was it. This is the qualification of an internal, swept out structural liquidity and created structural liquidity. And I told you, you have no business entering directly. People on Twitter took a very stupid loss for trying to enter directly from here. Why should you enter directly from an inducement just because it has a sweep? Doesn't make any sense. You don't have to lose before you win. As this year I've taken out now, it just went up and then it came down. So this entry does not have a valid demand zone. What do I mean a valid demand zone? You cannot say that this is your okay. Let's say you want to stack. You cannot say this is your entry number one. This thing said that came up said do not even come above this thing. This can never be your entry number one. This should be what's come to what 50% of this safe would better be. Look at what I'm saying, 50% of this safe. 50% of every long wick of a candle is identified as a demand zone in another time frame. 50% of this safe would have been better as your entry than saying this thing, any of these things here. This thing did not even go above them. So it's really, 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 really crazy to make that place your entry. So 50% of this would have been better or this low. So maybe you wanted to take a specific point. This would have been your entry number one, two, and then finally 50% of this three, your SL maintain the low. It's a long week, 50% can go or here, whatever you want to calculate and use. And then let's check if we had a confirmation for this good 5 minutes. And let's see what price did that the confirmation. Where is that place? No, there was no confirmation. This candle went below and could not go above. There was no confirmation for stacking. There was no there was no confirmation. You see that it has to happen within from here down. So it did not. That's why I said your if you wanted to even stack a specific point, it would not work. Okay, but your first entry has been triggered. That's why that first entry is important to be 50% of your overall risk you want to take for that particular trade because that's what helps you make the trade go in the long run and there is no regret whatsoever so far that you took profit. No matter how small your profit is, there is no regret. Remove the mindset of buying heaven and earth. Okay, trade, make profit consistently is better than running fast and running to nowhere. So we have to stop here. Let's stop and I wish you all well. Okay, we have to stop here. Is there I'll be taking 10 or 15 questions. You just have to raise up your hands and I will allow you speak. You are seeing the screen, so you will know when your hands are not raised up if you want to raise up your hands. The first person we have, just raise up your hands. Don't allow your hand drop. You are seeing the screen, so you will see where is written wants to speak beside your name. Once you raise up your hands to speak, your name will appear above or somewhere I would notice you. If you raise up your hands, symbol removes and then you want to request again, just keep tapping it till your name shows. So you can request to speak and I'll unmute you. Who's going first? Okay. Omobolaji. Let me hear you. Ayo. As I'm unmuting you, once you speak, I'm done answering your question. Allow the next person to speak. Unmute yourself. I'm unmuting everybody that requests to speak. Please don't waste our time. If you have nothing to say, I've unmuted a lot of people. Are you talking?
Good evening.
Good evening.
Um, Actually, my
Actually,
question
my
is
question is
about risk management.
About what?
Risk management.
Risk management.
Yeah, when it comes to
when it comes to
trading synthetic.
synthetic.
Okay.
You know, I don't know. Maybe it has been treated, but I've not been following the live video, so I do go back to check on recorded videos to cover for everything that I've missed. So I don't know if you can just shed a little light about risk management. When it comes
Well,
to
like I said
trading.
before, risk management is a bit very personal to me. That's why if I am talking to people, I say apply risk management based on your own preference. Now we have appetite or risk.
Okay.
Okay, let me just explain mine to you guys. Now, with the way I trade, I know that I'm not supposed to have 12 consecutive losses, no matter how bad the market is. I'm not supposed to have 12 consecutive losses. Now, that is my own strength as a person. Now, this is different for you. That's why you need to know who you are. Okay. Now,
Okay.
for me, I know that I cannot have 12 consecutive losses in a row back to back without one win in between. Now, if I have $200 capital and when it comes to risk management, it simply means being conservative in trading and you have no business with stacking. When you're talking about risk management, you don't have any business with stacking. And risk management and stacking are not even supposed to be in the same words because you are risking everything you have, and that is far, far, far breaking the rules of risk management. Now, if you want to trade with pure risk management, that's your own strength. My strength is 12. If I have $1,000, okay, I will divide I will divide my portfolio, which is my capital, divided by my strength. That is the risk I will have as my risk per trade. I don't know if you understand me. I said before that my strength is 12. Now
Yeah.
I will divide my capital I have to my strength. And I will always leave each trade at 3 weeks to reward, a particular definite risk to reward. I will never compromise it. This thing works when you are starting up, sha. Along the lines, if you forget about this thing when you need very, very fast money. This risk management is sweet to talk, but to implement it for a long time is really, really hard. I cannot lie to you. Now, I have $1,000. $1,000 divided by strength 12 is approximately 83. Now,
Yeah.
let's say I'm risking $83 per trade. Even if you want to stack, you will now stack with $83. You make sure that no matter what you do, you should not lose more than $83. And mind you, if your trade that you're stacking goes well, just this $83 can give you this $1,000 back. You don't need to do too much. This is trading with risk management. I'm just trying to like see how I will just join risk management with stacking anyhow I can. Now we have 83. Now you if you are following the normal rules of this thing I'm explaining, then you are supposed to leave the trade at 1 to 3 weeks to reward, even if you are stacking. If you're not stacking, you should be making $249. If you are stacking, you should be making more. If you're not stacking, you should be making at 1 to 3 weeks reward, you should be making $249. If you are stacking at specific point, let us say you share this your $83 into let's say you have 3 point of interest. It means that you are risking $27 per different point of interest, but the lot size will not be the same because somebody trade that you entered when it was inside SL before it came back to profit, and trade you entered directly at the entry. Even if you use the same lot size, the profit will never be the same. The one you entered below have more profit than the others. So you should be making nothing less than 500 to $800, risking just $83. So if you are not stacking, you're making 249.
Okay.
Do you understand what I'm saying?
Yeah, yeah, yeah.
Okay. As
Thank you.
simple as that. You're welcome. Any other question? Me tell love you please ask a question so we can go. We're meeting more. Please don't waste our time. Just ask your question so that we can go. I have to be in another class as soon as possible. It's already 10. So please. People are unmuted. Why are you not talking?
Can you hear me?
Yeah, I'm listening. I'm here. I hear you.
All right. Please, I want to ask about margin. I don't know if you can
Okay.
throw more light on margin on when you want to start.
Okay. Yeah, that is also important. When you want to stack, I will drop a link to I don't know if you maybe I will not drop a link, I will just copy it myself to avoid them wherever. I will copy it, I will drop it this night or tomorrow from morning to evening. I will drop pairs with big margin and pairs with small margin. When you want to stack, those pairs that have small margins, it gives you advantage to open more positions, like the whole stacking theory. Not the one that you want to risk $100 total and one trade is already carrying $100 and another trade and one position is taking $100 from your balance. It cannot allow you to open too many. But if it's like V75 1x, I think you're entering less than $1. You're entering like that and you are stacking. Yeah, you know what you are getting now. And there is a way you can reduce. I will send it. I will just send the link. Copying this thing will be. I will just send the link. You go and read it. There's also how you can reduce a particular lot size than the usual minimum lot size. So advantage as well. I will send the link tomorrow. You'll see it there. Are you hearing me? Where is the person that asked the question? Hello, are you there? Voila. Any other person?
Mark, good evening. Can you throw more light on stacking on specific points? Like, what are the specific points that we have to stack on
Can you
here?
just come be true and honest to yourself?
No, I'm not just
Nobody will
coming.
hear this.
Like, I'm just
It's
joining
not.
the call.
You're just joining.
Yeah.
You have mind though. Yes. You have mind though. Like you are just coming and you say I should throw more light on what you don't even know. I mean I should teach it again. He said if I throw the light now, will you even understand? This verse is where it says throw more light. I mean I should explain it again. Let me use this gold as example. It says throw light. Okay, let's just help him out. He came late. Next time, Sha is not me that is teaching next time, but whosoever that will be teaching, just try to be punctual so you don't waste people's time while they have other things to do as well. So now, based on that starting at specific point, I said it is done with calculations. Okay, you already know how much you want to reach total on that. Hope I'm still sharing my screen. Okay, I am. You already know how much you want to risk on that particular trade. Okay, let us say you want to risk like $200. Okay, your first entry is where you go in with 50% of the risk you want to enter with. So, because this place has a valid demand, this is our first entry. Don't mitigate it, but then we go in with $100 risk here. Our one lot size, for example, should be taking $100 risk. Now, the remaining $100 will be divided into the remaining um point of interest we are looking out for. Now, I told you that another point of interest is the low that got swept. Very important. Okay, that's where you can just divide the remaining one to the point of interest you want to enter with. Since this one we are looking at now, what we have is just one and two. Those too many positions you see people opening, they can just open only one. They decided to just make the trade look like it's just. I do that sometimes. I just want it to seem like it's a lot of positions. I just open and open and open, but it's already calculated. I already know that if I'm entering here, I have to risk $50 here, and then at this point I have to risk $50. $100 is already gone from here down to the SEO. I know if this one hits SEO, I'm losing $100. This one hits, I'm losing 50. This one hits, I'm losing 50. That's the total of my $200. Now at this point, I'm entering one lot size. I can try not to enter with one. Can decide to set limit with 0.1, 0.1, 0.1, and let it just be like 10 positions here. These two. Now the one lot size here will not be giving $100 risk. It can be giving $50 risk because there's a drawdown. Okay, that drawdown has been covered by risk. So you are now using one lot size again here, and you should be making something bigger than this one. The same thing applies to this as well. Okay, you you'll be entering with the same risk $50, you can decide to open 0.1 times as many that you have calculated. And if you check this one self, with this one price get to this place and it triggers and it start going well, this particular one should give you much more profit than any other one. If this one said, I'm not sure the risk will be one, the lot size will be one lot size. It should be like up to like two lot size. And you know what two lot size? If you are putting 0.2, 0.2, 0.2 till you get to two lot size, you know how many dollar profit you'll be getting from here, coupled with this and this. So this is like opening positions at drawdowns, but calculating it at your point of interest. Do you understand? If you don't understand, you watch the video now. I already explained it before. But I hope I threw more light, as you said.
Good evening, the biggest.
Yeah, I hear you.
I want to ask a question. Can you please help me out with inducement? It's like everything is on point, but this inducement is giving me an issue. I don't know for any other person.
Inducement
Please.
is the same as internal. If you know how to market
Yes.
internal,
If let me, I want to say something.
okay.
If price have like three break of internal structure, three internal break of structure, which amongst them is the inducement? Because the second one is disruption, right?
The most recent, just like this one now, the most recent break of structure, when another break of structure has not occurred, the most recent break of structure is an inducement. The next one that follows is disruption low. Once those two lows are invalidated, the rest becomes internal liquidity till the external, as many other internal liquidity are there till the external. Except as it is selling to go to the external, price gets exhausted and retraces back again to take out another inducement and another disruption. Then we move over to the next trend till another external again. Do you understand? The
You've been
inducement
saying
is decent.
you've been
I
saying
mean,
this, but I don't know how I find it so hard to get. Like, I've watched the videos over and over and over again. I even called one of my classmates today, and she tried to explain it. I don't know why, but everything is on point.
you know,
It's just this particular one.
just pray for yourself. That inducement is very important. That's internal. So you have to pray for yourself. It's not a laughing matter. Well, you're laughing. It's not something to laugh for.
Yeah.
It has to take out a structural liquidity, not compulsory, but compulsory he has to create structural liquidities inside of it. Minor small break of structure can happen with the candle type where it closes below another candle and the next one closes above it. Can also happen with series of candle movement breaking structure, but it needs to create structural liquidities inside, and if you're lucky, it sweeps a structural liquidity and then it breaks structure. Simple. The most recent break of structure is an inducement followed by disruption. Just pay for yourself. It's not hard. If
Thank you.
my
Good
are you
evening.
if by
Yeah, I can
next
hear
month
you.
you have difficulties, just tell me. I'll give you more videos to watch on the evening.
Okay. Thank you very much.
No problem.
Hello,
So let's
Sabiigal. Hello.
hello.
Hello. I also have the same problem like Michael. These internals have been giving me sleepless nights. I don't know when did the break of structure occur? Where is the inducement? Where is the structure liquidity? I just don't know. I'm finding it very difficult.
Okay. Are you from Nigeria?
I'm not from Nigeria.
Okay, that's fine. So
Yeah.
people that
Do you
have
mind?
okay, I'm
Do you mind
listening. What
taking a pair? Do you mind taking a pair right now and maybe try to show us the real thing, for example, in the 30 minutes time frame or in the one hour?
Okay, let me. Okay. Uh, if you are still any of you that will still have issue with this internal stuff, is just market structure. Okay, the whole thing is just like saying you have a market structure problem. That's just it. When you have this engagement stuff, it's just a market structure problem. You're finding it hard to get your market structure correctly. That's just the, the whole explanation. Now, it should be gotten from the 30 minutes. Sorry, the lower time frame. First of all, you have to get your external. Okay, you have to get your external first before talking about your internal. So, getting your external. Let's use this one for an example. Your external first, and then you don't have to mark out your internals from the higher time frame. Now go to like 30 minutes to 1 hour. 4 hours corresponding time frame for 4 hours is 30 minutes or 1 hour. That's why I see that whenever I mark structure in that time frame, I mark out the internals from the 30 minutes. Now you can see this particular this things here. This is a structural liquidity, the candle form. Okay. Now in another time frame, this thing is simply a break of structure that occurred. In 5 minute time frame, this is a break of structure that occurred like this. This is how this thing occurred. Now, whether it occurred with candle type of break or structure or occurred with series of candle movements, when a structural liquidity is being taken out and price creates structural liquidity inside, you take note of that particular place as an inducement. Now, if that inducement has been created and price keeps creating structural liquidities without giving another valid inducement, that inducement continues, for example, until the point where a new inducement has been created. All he has to do is on probability takes out a structural liquidity but compulsively creates structural liquidity. This is a structural liquidity, the normal one. This is not even the candle type, though the candle type is also there, but this actually book structure normal. I don't know if you get me now. What's your name? The other person was Michael. What's your name?
Yeah, Monique.
Nani. Okay. So, but if you still have issues, just rewatch the videos, all of them again and again and again till next month. If you still have an issue, check my bio on Twitter. Send me them. I'll send you more 3-4 videos on market structure because it's a market structure problem, not even just an inducement. Is that okay?
Okay, thank you.
Yeah, you're welcome. Let me get two more last questions before we
Good evening.
Hello,
come
good
down.
evening.
Good evening.
Good evening.
Can you hear me?
Yeah, I can.
Okay, concerning the last point of true mitigation, the is it after taking out okay, let's go this way. The last point of true mitigation, is it the demand zone or supply zone at the 4-hour external?
No, the extreme of every point of interest is the last point of true mitigation. For example, if you are entering, normally, if we have something like this now, this point of interest is here, price by. Last point of true mitigation is if this point of interest here, which is this one, later gets taken out, the last point of true mitigation is gone. Because, first of all, there was, or maybe there is an entry for somebody here. Last point of true mitigation, a place where after that point there is no way for you to enter that trade again. After that point, there is no way for you to enter that trade again. That is the last point of true mitigation. After that point, if this low now price takes out this one, let us say there was a normal this thing was 50% here, and somehow and he had sweep, but yet still failed. What becomes last point of true mitigation is the reclaim block. That's our last hope. If it goes above it, the last point of true mitigation is our reclaim block. He has to buy from the last point of true mitigation. After that one, this point of interest, if he comes back to take out this low, then you have no business with buying again. The last point has been invalidated. Do you understand?
Okay, I understand. Then also
Okay,
concerning
what
the pairs, like which pairs are most suitable for people that are trying to get into synthetics?
I say I will drop information on that tomorrow now. I will drop information on that tomorrow.
Good evening.
Miracle, the last question. Good
Yeah.
evening, Miracle. Let me
Good
hear
evening.
from you.
Please,
It's only
the thing you explained earlier, you only explained a scenario whereby we place an entry and there is a reversal before the actual movement. Is it that
no now.
on
I also explained the one of entering directly now. I explained of entry directly with confirmation of single candle order block. Are you just coming?
no entering directly? Okay, in a case whereby the price just tapped into our POI and starts moving and does not retrace this at
You're even
all.
stacking a specific
Um,
point. You still have to enter directly from your initial point of interest now. So you are not at loss. It's not a missed
oh,
entry. You still enter from your normal direct point of interest. Your trade has triggered from there.
okay, so it means that it's only when our price is retracing and still dancing around our SL that we can stack.
Not really. You can stack at your entry point as well with single candle order block confirmation.
Okay, all right.
Yeah.
Thank you. I will.
You're welcome. Just watch the video again and pay attention to the part where you have a misunderstanding. So, guys, we have to stop here for today. Not for today, probably forever for now. But if you have results, please, I like when people show me results. It means that my efforts are being acknowledged. So, I've put in so much time for this class, and I hope to see astonishing and mind-blowing results. So please take your time. You're not in a competition or in a hurry. Take your time to study and send results, and I'll put you in my prayers. Thank you and have a lovely weekend.
Thank you very much.